Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this tutorial, I will be speaking about which are the best moments in the day to trade the Forex market. And I will also explain which are the best days to trade the Forex market. So this tutorial will be divided in two. First, we will be speaking about the best moments in the day, and then we will be speaking about the best days of the week to trade Forex. So this is definitely a video that you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Okay, so first of all, let's start from the basics. Now, when it comes to the Forex market, there are mainly three sessions. That is what generally in this industry you call the three moments in the day when it comes to the liquidity and the kind of movements that you get during the day. There is the Asian session, there is the London session, and there is the New York session. These are the three main sessions, okay? Now, when we speak about the Asian session, mostly it is the Tokyo exchange that we're speaking about. The major, it is like the Wall Street of the Asia. Okay, Wall Street of Asia is Tokyo. When it comes to the London session, well, it is obviously the London exchange that we're speaking about, and well, New York is the New York session. So these are the three main sessions. Now, there are many indicators here on TradingView that will automatically mark up for you these sessions. Now, I have taken one of them here, and if I make it here visible, you will see that we see different colors in different moments of the day. These are essentially the three different sessions that I have just spoken about. Now, why is this relevant? Because in different sessions, you will have different kind of volume. And when I speak about volume, I mean the amount of trades that get placed. And as traders, we look to capitalize when there is movement in the market. So the more volume that there is, the more volatility there is, and the more volatility there is, the more movements in the market there are. And that is exactly the kind of situations in which, if you are a day trader, you're looking to be behind the chart to look to capitalize on those movements. Because when there is the most volume, that is the moment in which there is the most movement in the market. Therefore, that is the moment in which there is the most opportunity. Because the more movement there is, the more opportunity there is in the market. So how can we identify the best moments in the day to actually be behind the chart if we are day trading based on the sessions? Well, there is another indicator which we can pull up in order to identify that. But before we do so, first, let's clarify what these colors are actually identifying. So which color is which session. To do that, let's go here to the settings, and we can see that the first session here will be Asia, so the Tokyo session. The second session is here Europe, so London session, which is the, let's say, the Wall Street of Europe is London. And the third session is, well, America, so essentially this New York session. And when it comes here to style, I have put in green the first session. So in green, it will be the Asian session, so Tokyo. The second session, so the orange one here, will be the London session. So orange is London. And well, obviously red will be the New York session, okay? Now, you will have noticed by now that there are some specific moments in which there is an overlap, in which we have the orange, which is overlapping with the red. And if you remember, the orange is the London session and the red is the New York session. So what we can notice here, we are just on the 15 minutes time frame of Euro USD, is that there are some moments in the day where there is an overlap, as we can see here, of these two sessions, which are essentially the New York and the London sessions. And what we can notice is that during this overlap, there is very often some massive movement in the market, right? And anyway, around these around this overlap, so also in the hours before and few hours after this overlap of the two sessions, that is when most of the movement of that specific day, and you can see that by going on a daily chart, most of the movement in a specific day usually happens around the overlap of the London session and the New York session, because that is when there is the most volume. Therefore, as I have just explained, the most volatility and the most movement in the market. And therefore, that is the moment in which there is the most opportunity if you are looking to day trade. Because if you are on the right side of those movements that happened around the overlap, you're obviously looking to capitalize on those specific movements. Now, why do we have the biggest movements exactly in that overlap? Well, as I was explaining previously, that is because you have the most volume precisely around those levels. In fact, if we go and pull up a volume indicator, okay, and we make it here visible on the chart, what you can see here the volume indicator is that around the overlaps, you can see here these spikes, right? We can see these spikes in volume. The volume definitely increases around these overlaps because there is a massive amount of trades placed all around those specific hours, which are the overlap hours of the London and New York session. So if you are a day trader, those are the best movements to be behind, the best moments to be behind the chart. So that is the first thing that I wanted to explain. The best moments of the day to be behind the chart. Now, the second thing that I wanted to speak about is which are the best days. Now, when it comes to which are the best days, we have to a bit go on a higher time frame to make it make more sense. Let's remove the two indicators that we had here to explain the best moments of the day. And we have to a little bit also here start from the basics, okay? Now, there is a very important thing in the market, which is called the commitment of traders, okay? And if you're following me on this channel for a long time, you know that I have a proprietary software that essentially collects the data and displays it here in an easy to read format. And the commitment of traders is essentially what the non-commercials, so the big players in the market, big institutions that are in the market to speculate, so the non-commercials are in the market to speculate and to make a profit, how they are changing their positions and moving their orders. So essentially in which direction they are trading. And obviously they would like to not be forced to report their positions, but since they are such massive players, they are forced to report their position. Specifically, they are forced to report their positions on Tuesday. And you might be asking yourself, okay, but why is this relevant? Why it is important that institutions are forced to report on Tuesday? Because most of the times you will see that the market will move to the opposite side of what it will then follow through for the rest of the week on Monday and the start of Tuesday. And then Wednesday, Thursday, and Friday, it moves to the actual direction that you can then see on the weekly chart with the weekly candles. Because obviously, if the market on Monday and Tuesday goes bearish, Wednesday, Thursday, Friday goes bullish, on the weekly time frame, you will just see a big green candle, right? But then actually on the daily time frame, you had 2 red candles and then 3 green candles. Now, why do they do that? Because since they are forced to report their positions on Tuesday, they can manipulate the reporting, which they do sometimes by looking to short the market on Monday and Tuesday, and then they report their positions, which at that point show that they're actually moving to the bearish side, and only after that they reshift to the bullish side and follow through. So in my opinion, the best moments to trade are after Tuesday, so after this manipulation, if you are a swing trader. And that is essentially why I said that this video is kind of divided in two, because the first part, so the best moment of the days, is for day traders that want to be behind the chart in the right moments. While for swing traders, which are the best days, well, in my opinion, it is after Tuesday, so after the reporting takes place. And that is the moment in which the manipulations are supposed to be over and the market is supposed to move to the correct direction for the rest of the week. So I hope this video was useful. There are definitely things that we can dig deeper when it comes to these concepts. If you're interested in this and you want me to make a follow-up tutorial on this specific subject, let me know in the comments below, and also like the video so I know that you enjoyed it and I can make an update going even in more detail. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COD data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.